Friday. It's November 8th. Today is, I think it's the end of one of the best gains, weekly gains in the market. We can look at a weekly chart of the Qs here just to see how good we're doing. I mean, remember, these are indexes. These don't move 5% in the week without huge catalysts. And we opened up the Qs at 486 this week. So hopefully you bought at that 486 because we're at all-time highs at 513. And let's talk about the 4-hour algorithm. By the way, I will tell you on Trendspider, I had a meeting with the Trendspider guys yesterday, and we'll go over some of the new things that they taught me. It was one of those where you guys can get this too. You sit down with a product expert, and they're like, let's show you this. Let's show you what we can do here. Let's show you what we can do here. So I've got a couple of things that I want to show you. But the biggest thing is one of the complaints from Miss Random, I forget her name on YouTube, was this. You can now see in the middle of my screen the symbol that I'm pulling up. You don't have to look up in the upper left, but it's in the middle of the screen. So I've highlighted it. I looked at it. I'll colorize it. It is in the middle of the screen, the actual symbol that I'm looking at. And here on the Qs, the algorithm got you in November 6th, 2 days ago at 504. We're trading at 513 right now. It's Friday. We don't buy on a Friday unless you're dollar cost averaging your way into an index. But I like the 503 to continue as support. But what I'm going to start out with today is alpha picks because I got a great tip yesterday. Tone Lee, thank you so much. You were super generous. I'm going to read you his email right now, just so you know. But let's start out with the first thing. 2 weeks ago, October 25th, I went over it yesterday. I bought Alpha Picks, and I bought $50,000 worth of that portfolio. The podcast is there. I can put it into the newsletter, but it's already there. I will put a link to it if you'd like to see it. If you'd like to see the video, it's still up there on YouTube. There is everything that you need to see up there on YouTube so you can watch it. Now, I don't know if I mentioned it as well, but last week I bought $85,000 additional of the Alpha Picks portfolio in my parents' portfolio. They are in their 80s. They don't like to take risk. I don't consider Alpha Picks to be super risky. Again, past performance can't guarantee future results, and you can see the past performance on your screen, but I was comfortable enough with after gaining 30-40% on 3 of those stocks, I was comfortable enough to make sure that my parents had some money into this Alpha Picks portfolio. Now, it's $449 for this subscription. I would argue the way you do this is you take the amount of money that you want to put into Alpha Picks. Okay, I showed you how to do it once you subscribe, but I showed you take the amount of money. Say it's $10,000. You better make sure that $500 is what you can do. $500 off of $10,000. What's that? 5%? 5% gain. That's a big gain to make out of a portfolio that has done this well. I would argue you could probably make 20%, but make sure that dollar amount is going to outweigh the gains that you make. I would argue that during this time when the S&P is up 51%, Alpha Picks is up 147%. They do outperform S&P. But remember, with VOO, there is no cost. With QQQ, there is no cost to you. There is no out-of-pocket cost. There are fees, but there's no out-of-pocket cost like there is for Alpha Picks. I will also argue that the way I did it before, which was picking and choosing stocks, I don't know that completely works. I consider myself fairly educated, and most of these stocks I don't even know about. I read the description, then I'm like, I shouldn't do it. And then it's up like 40%. And so when I decided to actually go all in and just buy the entire portfolio, that's the reason is I tried to do a pick and choose. And I didn't like that strategy for myself. You can use that strategy if you'd like, but I would argue that, you're listening to me for a reason. I probably know a little bit, and it just didn't work for me. And I brought up a bunch of stocks on here, but I'm going to read you Tone's email. Yo, Gary. Been a busy week for me. Haven't caught up on the last few episodes of the podcast. I made sure to listen to your Alpha Picks portfolio one, though. Just wanted to thank you. I'm an Alpha Picks subscriber now, but I never took the leap until you did. I'm already up 17% in my own personal portfolio. Just wanted to send you some love. Give me your Venmo. And he sent me a super generous tip. I said, it's not necessary. I am just happy that you made money. Christina, my alpha picks are killing it. Scott, I'm just a fellow degenerate and I don't know how to pick stocks. However, my alpha picks are ripping today. I'm wondering if they set me up for a Trump win. I just don't know. Those are just some of the comments that came in. Now, I will tell you, one of the alpha picks is this one that you're seeing on my screen, AppLovin. Okay, we can go and look at this one because AppLovin reported earnings yesterday. And this was on the podcast yesterday. What it closed up? Closed up 46%. 46%. This probably would have paid for the entire subscription depending on how much money you put in. But they have picked it a long time ago when it was down here at 40. When it was, I think they got in around 40 something. I don't know when they got in, but they picked it far sooner than I did. And they've enjoyed this run. Okay, so Alpha Pick subscribers have enjoyed this run. So I just wanted to bring that up and start it out because I know, some of you guys don't believe. I try and make sure that you have the best tools possible, and Alpha Picks is one of those tools. Now, I didn't know that I'm an investing expert, but this Investing Experts podcast, I will include the link to it, but I was a guest. I recorded it last week. And you can see investing strategy using fundamental and technical analysis, the importance of buy and hold for wealth accumulation. And Rena and I, it was a great discussion. I really like Rena, and I told her, I said, you just make it easy to talk to. And this is the entire transcript. I would just ask you, if you are a Seeking Alpha subscriber, or if you have an account, I don't think you need to be a paid because I logged out. And you can listen to this one for free, or you can find it on Spotify or Apple Podcast. But if you are on Seeking Alpha, just leave a comment down here. I'm trying to get them to get me to back on because I did enjoy it that much. So they want me to write for Seeking Alpha. I just haven't written for Seeking Alpha. You guys can get my newsletter. But again, I think the podcast is good. I bring up, Brian brought up Layered Superfood, Zeta Global. It's a alpha pick. I like Shark Ninja. I mean, I've said that Shark Ninja, when that one turns on me, I'm probably going to buy it. It's sitting right here at 95. Now, it will probably give me alert today when it opens. I have an alert behind my head. I have an alert right there. So I like that one. But the podcast is out. If you would, just comment on it. Now, some of the comments that don't make sense to me, this douchebag, Smurf 907, he commented on YouTube, SMCI up over 11% after you told everyone to get out. Ha ha, laughing at me. Thanks, cuz I got to buy it all for the low while everybody ran for the hills. Okay, Smurf, if you're listening, my Venmo is on my link tree. You can send me because you made money off of what I said, I'd consider that, I'm your bartender. I just brought you a beer. If you made money off of what I said, I brought you a beer. Go and tip me. Give me a nice tip because this, Tone sent me a nice tip just because I recommended Alpha Picks. Don't be a douchebag. If you're going to leave a comment like that, go and Cash App, go and Venmo, go and say, thanks, Gary. I made some money. Because I'm assuming that you're Jeff Bezos sitting in your mansion or on your yacht because you do everything right. Douchebag. Make the world a better place. Positivity. Douchebag. Yeah, don't get me started. Now, Jay Powell. Jay Powell's the guy. This is Uncle Jay. So they cut by 25 basis points. Risk to dual mandate and balance. Jay Powell was also asked, if Trump asked you to step down, would you? No. And then they said, can you expand on that? No. What? Can he legally fire you? It's against the law. I loved those answers because remember, Jay Powell has masterfully, he was late in cutting rates and most likely we wouldn't have had 2022 had he gotten in at time, but he has played this game masterfully. I think the man deserves to keep his job and there will be a crisis if he's tried to be removed, but he is basically, those people that sit in the trees with chains on them and they say you're not cutting the trees? That's Jay Powell. He's got his arms around the Fed. He said, I ain't effing leaving. I'm not leaving. Now, here's the Seeking Alpha analyst. One of the things that I tell you about Seeking Alpha Premium is I like having it because I get to hear from other people and the analysts. And I don't always take their opinion. It's not, even Warren Buffett with his analysts that he pays hundreds of thousands of dollars a year, I bet he doesn't listen to some of them. He takes the information in and he does it. But that's what Seeking Alpha Premium gives you. It gives you all of these analysts to tell you exactly what this means. I'm one of the guys, but I guess I'm an investing expert now. I can put that on my resume since I was on that podcast. But this is just what they think about the rate reduction. The rate reduction did nothing. I mean, we can go back to the Qs and we can go back to a 5-minute chart and we can look at it from yesterday and you can see at 2 o'clock, there was no real move. I mean, it just continued up. Now, if we open up after hours and we look at this stuff, it's come down a little bit when it opened up at 5 o'clock this morning and we're trending down just towards the 200-day. But we're still in a bull market. Make no mistake, we are still in a bull market. And that 503, 504, I think that's going to wind up being actual support. So China, we talked about China about 2 weeks ago, and it was David Tepper saying buy everything. He's been wrong. I mean, he's been wrong. And what did China do today? $1.4 trillion of stimulus. Now, experts have said that this is nothing more than just moving money around. So it sounds great. All the markets are down. So Tepper was right for a short period of time, just a week. Is he right for the long term? I don't know. I mean, he's a billionaire, but he's bought big into this. He may be down, but you can't time the thing. If you want to look at KWeb, which is one of the biggest ETFs in China, see, I mean, since he said that buy everything, it hasn't been good. The algorithm got you in at 33. You're trading at 34.27. I don't know if it's necessarily, in pre-market, KWeb is down 4% at 32. So it just doesn't have a great chart to actually trade. You're seeing it. The 200 days moving down on the weekly, and that 50-day is just kind of sliding. You're trading at the top of your Bollinger Bands. It's a little bit extended. If your time frame's longer term, then you can probably stay in it. But if your time frame has been shorter term in China, I haven't been in this one. I think I played yin and yang. YINN is the bull case on China. And this is triple levered. So it is very, very risky. And you are down 13% in pre-market. But the bear, which is the inverse, yang, is up at 69. This is up 15%. Okay, 69. Where's the 200-day on this where it just fell off out the bottom? The 200-day is at 140, but it's moving down. And these are decaying assets. So realize it's a decaying asset. It's not something that you want to do. Some notable names that hit 52-week highs yesterday, or I'm sorry, all-time highs. NVIDIA. NVIDIA hit an all-time high. It's in the core portfolio. Amazon hit an all-time high. 210. Okay. Netflix, it's in the core portfolio. You can follow all of this. Netflix is in the core portfolio. Palantir, I don't own it, but it's in the core portfolio. One that's not in the core portfolio, but you may actually be listening, is Spotify. This hit another 52 or all-time high. Another one that's not in the core portfolio, but I do own, MicroStrategy, hit an all-time high. One that I have on a watch list, but I have not purchased, but I've loved since 60, is Oracle, hit an all-time high at 180. And yes, still haven't bought this one. Don't ask me why. Another one that I don't own, but I brought up a bunch because I want to own it instead of Salesforce, is ServiceNow, another all-time high. And a chip company, Marvell, MRVL, another one that hit an all-time high. SPY and VOO. We're going to go look at VOO because these are the two main ETFs that track the S&P. The S&P has had 48 all-time record highs this year. So far, this is the 6th best year since 1950. That's how good. When I tell you we're in a bull market until we're not, that doesn't mean that you don't see pullbacks in the bull market. But when you see a pullback in a bull market, you wind up putting money in. And remember, we talked about this range. The only people who were actually losing money on that August 5th trade on VOO were the people who put money in higher. Well, guess what? They're now positive. So long-term, again, with the podcast that I did, long-term buy and hold makes you money. All of these stocks that we trade, you can trade in and out of them if you'd like. But any stock that you have conviction on, if it is a bottom left, upper right weekly chart, feel comfortable holding it until it's not. You can use the 50-day. We talked about Bollinger Bands a lot. We talk about RSI. We talk about MACD. Use all of these tools to try and make sure that you're managing your portfolio correctly. But do not get out of the market. Time in the market beats timing the market. Now, Tom Lee is arguing year-end rally. And guess what? Tom Lee started his own freaking ETF yesterday. It's called, I forget what the symbol is. Let's see. It's the Granny Shot, GRNY. I couldn't find it because it just debuted yesterday, GRNY. I don't know who's selling it, how you can buy it, but it's Granny Shots and they go over stuff. I'll include this link in the newsletter. We're going to go over a couple of things hey, did you buy the dip in Meta with the election? Because Meta soared up yesterday back to 589. I would argue, get this, anything that 550 is going to provide support. And what did we see? We saw it pull back here to low of 555. You were close to 550. Doesn't mean you have to time it. But if Meta is in your watch list, go and buy it. And if that dip is happening, go and buy it. The valuation is not bad. Bottom left to upper right. We're trading at the top of the Bollinger Bands, above the 9-day, so you have confirmation. Their earnings are coming out, or their earnings have already come out. So the MACD reset, you got divergence between the MACD going down and the stock price going up. So I would argue this one is a good one. Did you get Taiwan Semi while it's under 200? Because right now it's over $200. If you didn't invest in Taiwan Semi and you wanted Taiwan Semi, maybe you're like me with Oracle. I just don't think that 60 is a good price. Effor's at like 189 today. I regret that one. So don't let this one regret you. Again, these are the only people that are making stuff, making the chips. And then you've got NVIDIA at all-time highs. I don't know if NVIDIA is going to go under 140 again. But if it does, you buy the dip. Their earnings are coming up. They're going to blow it away. Are they good enough? I don't know. But Wall Street thinks that this one's worth $150. If we go and look at this one, NVIDIA, Wall Street's going to chase their price target up because we already saw the hyperscalers are still spending. 150, it's only 1%. And yes, at 120, I was saying, analysts think it's worth 150. So if you haven't bought it, you've got to take a look inside and say, why didn't I buy it? You don't go and chase it, but why didn't I buy it? And when the next dip happens, you go and buy it. Now, Trendspider has this stuff called squeeze, a pre-break squeeze scan. And Costco is looking like it's going to break out. That's capitulation right there. Okay, that squeeze right there. The red, it's squeezing. It's going to go in one direction, whether it's down or up. So Costco is in the core portfolio. I would argue that this one with holiday time, we can look at some of these things. Holiday time, we talked about Costco in November. The last 14 years, 100% with the mean at 5 point, let's see, 5 point, mean change 5.69. Let's look at the monthly candle so far so we can see where Costco is. The monthly candle right now is at 4.52. So your mean change is 5%. This is how you use Trendspider. So you can get all of this information on Trendspider. I had a meeting yesterday with my affiliate person. By the way, if you're waiting to sign up for Trendspider, I commend you. Because my affiliate commission, you pay more, I make more. So if you're on the fence, I'm fantastic about that. because I'm fairly certain that there's a large number of people who are on the fence. This is your best opportunity. My sit down with the Trendspider team yesterday was what you will get with the unlimited one-on-one training. It was invaluable because I tell you all the time, I don't use half the things that Trendspider has to offer. And so my sit down with them is going to change the way I use Trendspider. I've got to go in and set it up with some of the things that they gave me. But remember, this one is $45 a month if you just want the basic package. You will get my 4-hour algorithm. You will get the 65-minute algorithm. You will get the watch list. You will get all the tools that you have in there. You will get everything that you see on this screen. There is nothing limited. You will get AI training models. You will be able to create your own indicator. You can add to their hundreds of lists of indicators that you see here. Look at all those indicators that help you find stocks that are in a bullish trend. You can hit the stock market cap. Okay, these are like bubbles and things like that. What's happening now? These are special things that you can do. You can do unusual options in SPY and QQQ that are over $1 million. Large outside the money puts, all insider trades that are over $5 billion. These are all things that are set up for you. Oh, and you want to follow Nancy Pelosi? You can follow her. You can follow Josh Guggenheim, whatever that dude's name is, who trades like billions of dollars. Okay, government sales that are over $15,000. You can track all of this. I don't use a lot of this stuff. Okay, there's a reason I don't use it is because I just didn't know that half this stuff existed. There are so many tools in Trendspider. So when you use the link tree to go and sign up for Trendspider, let me explain the 3 tiers. The first one, 30 simultaneous alerts, 5 active windows. We just had somebody, I think it was Mark, upgraded yesterday to the enhanced plan because the deal's so good. It's only $4 a month. He got 100 simultaneous alerts and 30 simultaneous spots. And I think he might have gotten to the advanced, to be honest with you. Because the advanced not only does it have 100 bots, 400 simultaneous alerts, the most important thing is this unlimited one-on-one training that I got yesterday. Okay, the reason I got this yesterday was I wanted to go through what you guys go through because I use the tool already. And I've been using it for 4 or 5 years now. And the great part about using this is that using this one-on-one training that they offered me was that I get to see after 5 years, can you teach me some things? And yes. So think of it this way. If you were to get this standard at $45 a month, for $10 a month, you can have once a week, you can have once a day training. Okay, you can have once a day training with a product expert who will guide you through this tool. Because mind you, it is not a tool that is plug and play and is going to guarantee make you money. More than likely, you're going to have a learning curve on this. It's like golf. You know, you're not going to win the US Open the first time you pick up a club. So again, I will include this seasonality percentage change in the in Trendspider. It changed mine. I might include it on my. It's something down at the bottom. You see on the bottom of my screen, I have the MACD and the RSI. It adds those bars. That basically is the seasonality. You can go by week, you can go by day, you can go by month. So whatever chart that you pull up, it pulls up that seasonality. So and you can customize that thing. So I really, really like Trendspider. Now Vistra. They announced earnings yesterday. They killed it. They killed up 7%. This is the largest gaining S&P stock year to date. Oh, and by the way, the quant has it as a strong buy. The quant just moved it to the strong buy yesterday because the valuation is no longer an F. It's a C. Remember, these are A through F. Doesn't mean that they have perfect financials. Doesn't mean that you're not paying 25 times earnings. Doesn't mean that, you know, they have some things like price to book, which is $15 per share. You can't, doesn't mean it's perfect, but their growth, their revenue growth, 4%. What's the sector? The sector's losing 3%. So, you know, again, it doesn't mean that it's perfect. Leverage free cash flow down 41%. The sector's losing 4%. Profitability, 41% profit margin. But return on common equity, 56%. Remember, this is a utility. Momentum, it's an A+. Now, C, you can see three analysts have brought their earnings per share up, one down. 3 have bought the revenue up, 2 down in the last 90 days. And we can go and look. Wall Street says it's a buy. What's their average price target? 6% above. It's 144. You're trading in pre-market at 135. But this is the year-to-date S&P top winner. 251%. So, and I think somebody asked me about TLN and the social request, so I'll get to that. Motley Fool sent me an email yesterday, and I will put this screenshot because I'm not an affiliate of Motley Fool, and I'm not a super fan. But they did make an interesting play yesterday. MCore. And so I was looking at this one, and I don't know, did Motley Fool get into it a little late? Let's take a look. MCore, it's a bottom left, upper right chart. I mean, you can't argue with that on the weekly. You go to the 4-hour, and the algorithm makes you 138%. Buying and holding makes you 255. But I don't know this particular company. I don't know how the chart works. So in my mind, at least the algorithm is making 138%. I win 46% of the time. My average win, 12%. My average loss is 2%. So I like this one. Let's go and see what Seeking Alpha says. Oh, no. It's EME, I think. MCore, EME. That's what I'm looking at. EME. EME. Let me type. Pretty good. Well, look. I mean, you can't argue with this one. Year to date, you're up 134%. Well, Wall Street says it's buy. Seeking Alpha analysts say it's a strong buy. You can go and read any of these Seeking Alpha analysts that have said it. This person said it's a strong buy here. They're up 28%. This person said it's a buy, and they're up 31%. This person said it was buy. They're up 31%. This person in July or March said it was a buy. They're up 43%. So it's a strong buy from the Seeking Alpha analysts. Then you go to Wall Street, and you can see they think it's $515 price target, but there's only 2 analysts that cover this. And then the quant has had it as a strong buy. And they've had it as a buy or a strong buy ever since it was trading at $385. So the valuation, it's a little bit high. Not crazy about it, but the pay ratio, 0.36. So let's go and look at the growth. The growth, they're growing 17% year over year. It's pretty good. It's pretty good. Levered free cash flow, they're growing 97% year over year. That's really good. Profitability, 18% gross profit margin. So that's not great. But overall, the return on total assets, 12%. That's great. Momentum, you can't get better momentum. Look at that momentum. Revisions, everybody's bringing it up, but there's only 2. The revenues are being brought down. So when do they report? Let me see when they report. They already reported, and it looks like they took off from 452 all the way up to 500. So again, you're in this one. I'll print the Motley Fool article on it. I think that this one to me makes sense. At least Motley Fool typically doesn't make sense, but this one had a good thing about it. Now, XBI could be on the massive breakout here. So top holdings, INCY. XBI, I don't typically scan for this one. This is the biotech spider sector. I don't typically look at this one at all. But XBI looks like it could be breaking out $98. We're up at 102. If you take a look at this one, you're seeing it right at that 200-day with a positive 50-day. Okay, MACD's not extended. The RSI at 60. And you look at XBI over here, and you can pull up the top holdings here on Seeking Alpha. And XBI, Insight, United Therapeutics, Gilead, AbbVie, Vertex Pharmaceuticals, and by the way, one that we talked about, Viking Therapeutics. There's 146 names in here. And so I think this could be like the GLP-1 kind of thing. You could buy XBI and just enjoy some exposure to GLP-1. Year to date, this is up 15%. Does it beat the VOO? Over 1 year, it does. Year to date, let's see, 15%. The S&P's up 25. 3 years, the S&P is up 27%. This one's down 21%. So it probably is a decent one to hold, especially with Trump getting into office. Maybe this one, kind of RFK. Is it risky? Probably. So XBI, let's talk about TOST, our watch list on earnings. TOST killed it. This was up as much as 20%. It's now up 11%. TOST absolutely killed it. And yes, this is in our watch list. So if you had Toast and you had Trendspider, if you had Trendspider and you had were scanning the algorithm, the 4-hour entries, you would have gotten on the watch list an entry here on September 11th at 24. You're at 32 now. It's a pretty good run. Pretty good run. So I like this company. They killed it. If you didn't know, Toast is like, if you go into a local restaurant and they don't have delivery through DoorDash or Grubhub or something like that, Toast is a company that will set them up with a terminal, with a website that you can order online. And it streamlines their stuff. Yes, it's not making money. We can go and look at it in the quant. It's a hold. And the reason is the valuation. You're paying for a company that doesn't make money. You're paying 75 times forward earnings. That's essentially what it is. So you're paying for this expensive stock. So it has traded in a range. We can look at it here on a weekly. It has traded in a range around that $25 and it broke out. So you had once it hit that 25, twice it hit that 25, and then it just floundered. And then it broke out. And you're trading on the upper side of the Bollinger Bands. I like the stock. I like the chart. It's an interesting one. I don't own it. I'll wait for the 200-day to come out in order to see where it is. And if it's above here, maybe I'll buy it. Arista Networks just reported Q3 earnings. Here's why the stock is falling. It's down 6%. I would argue this one, from a valuation perspective, is still expensive. When you go to Wall Street, it's still expensive. It's trading at $402 in the pre-market. I would expect it to get under $400. But what I would watch for and what I would set up an alert for is you can set up an alert, price and ratings. Price and ratings. We can set up a new alert for this one, and we can say rating, and we can say trigger quant, or we can say Seeking Alpha or Wall Street. I would wait for this one, Seeking Alpha quant. I would wait for this one to get to a buy. You can do it, but you can set that all up. I'm not going to do it because I don't want to alert on this one. Be honest, it's one that I've watched since 300. ANET is one that, I said, hey, buying it under 300 should have been on my thing. This is another Oracle. It just got away from me. And I just didn't invest in it. But it's one that really, really went well. And this was a Josh Brown pick, so I really like that one. Now, I know somebody brought this up the other day. YETI. YETI rallied yesterday on earnings. I missed this one. This is one. This is why you don't listen to a douche on the internet. Do I use YETI products? No. And somebody brought it up and said, hey, what do you think of this one on earnings? I didn't know that it was going to go from 35 up to 38. But hey, the algorithm did. The algorithm said, hey, buy here at 38 this day in the morning. It went down to 33. 33 it went down to. And maybe somebody panicked right before earnings. But then on earnings, it just pops up. Just popped up. But YETI rallies as earnings offset takeover speculation more than offset tariff concerns. And that's the biggest issue was tariffs. Now, another one that I do own, and I should be trading, but I do own it, is DraftKings. This one tanked yesterday. Okay, it's not down as much right now. It seems to have come back, but it tanked. And monthly unique paying customers increased 55%. Everything's great. With major sports converging on the calendar, we are well positioned to build on this momentum. Everything looks good. The problem is people won too much money. And that was literally one of the things they said. People won too much money. Now, if we go and look at this in after hours, I'm going to pull up a 5-minute. You can see this one went from 39 all the way down during this time to 31. 31. Any reaction in the market is an overreaction. And it gained some confirmation. And then boom, it hit this 35 mark this morning when it opened up. And it's rallied since. And the reason is because DraftKings is a pretty good stock to own. Now, when you look at this one, yes, it looks weak in the short term. But I would argue this long term, you're sitting between that $32 and $40. So if you can buy this between $32 and $40, I think you're positioning yourself to go higher. It is super expensive. This is not one that I would say go into balls deep. I would add 1% of your portfolio if you use DraftKings. If you use this one, I would do it. You can go and look at 9 of the 29 others. I actually should be trading this one. And I should be trading it on the algorithm. Absolutely, I should, because the algorithm makes you 204% versus buying and holding makes you 132%. And we can see it. It got a buy in here at 38 and it dipped down. In pre-market, you're at 38.67. I would argue that we're going over 40. Now, if you want to take that, you can take that. So Jacob asked me, hey, Gary, curious what your thoughts are on Seagate STX. He did a good analysis. Let me read what he says. Looks like the RSI is in no man's land in the low 50s, and MACD may be about to curl up on a weekly basis in the middle of the Bollinger Bands. Would this be a good buy at 104 and get back in at 110 or higher by the end of the year? I'm sort of wondering also if this stock will be affected by Trump's tariffs since it's a Singapore company. Looks like they have a high debt to capital, which is high in your opinion, or what do you look at? I don't look at that stuff. And tariffs haven't come true, so you can trade on the kind of the rumor and stuff. But if it's a Singapore company and they're importing stuff versus making it here in the U.S., maybe they just find somebody to make it here in the U.S. I don't know. The only thing I know about is that this is, I think it's a memory company, if I'm not mistaken, but I don't know for sure. Now, the algorithm makes you 62%. For me, not knowing the company, I'd be perfectly happy with that. And you can see the last few times when you got in at 94, you enjoyed this one going up to 110. So if this, it sounds like this is a trade for you, Jacob. So I would argue that we're well on our way to covering this gap up to 111 on the 4-hour. Yes, the MACD crossed up. Yes, you see the algorithm get you in at 101. In pre-market, you're at 105. It's a Friday. I don't know necessarily that I would buy it, but you're right. The RSI is in no man's land around 50. It was way down here at 27. Okay, look at how nicely this is set up between, and we're just going to do a channel here between this 110 right about here. We're going to do 110 and that point right there. So anytime you got down in the low 100s, even below 100, it was a buy. And I can remove this channel, and I can just do a trend line on this one, anchored from here, and that trend line, you can see if I just anchor it, I'm going to anchor it right there. Then I can use that as my stop loss at 102. So if you buy at 105, just put a stop loss in at 102. But if you want to trade it and get to 112, that's probably a decent direction. But just make sure you have your stop loss there because that limits your downside. Now let's take a look at a weekly. A weekly, you had the golden cross here when you were trading at 91. Pretty good. Again, let's just do a simple trend line. And we'll anchor it from here. We'll anchor it from the lows down there in, it looks like July of last year. We'll just anchor it and we can touch 2 points. Okay, we want to touch a couple of points. We can touch it right there. That gets you the support right there at about 99. This is open at 98. The low is 98.83. So again, if you want to put your stop loss in at about 100 and just wait for it to go to 110, probably not a bad trade. And I think this is a company that, in my mind, I don't know what the financials are on this one, but let's look. It's a buy. The valuation, not crazy. It's an A. I mean, look at that PE. The growth, fantastic. I mean, versus everything else. Profitability is the problem. Their gross profit margin only 28%. So they're cutting costs in order to make that revenue. Not bad. Momentum, great. Look at the momentum. Revisions, how many people cover this? 17 up on the earnings per share, 4 down. 15 up and 6 down on that one. If we go over to Wall Street and we say, okay, what does Wall Street say about it? Wall Street says it's a $117 price target. Like I said, it's probably covering that gap. So on the 4-hour, it's probably covering that gap. I don't know when their earnings are. Let's see when their earnings are. I hate when Trendspider does this. Let's see. We're going to just refresh this one. STX will go into the 4-hour. Where is that gap up to? Oh, I don't want to hear penny barking. That 4-hour gap is up to 111. So, yeah, when you look at this one, it says 117. I think you're fine. I like it, Jacob. So, I think it's a good one. Again, if it fits your wheelhouse going, I think you go after it. I think the The theory there is perfectly fine. Hey, Gary, love your show. Do you think Eli Lilly has a buy the dip opportunity right now? So I would say yes, but I would probably wait for the algorithm. And the algorithm will get you in probably in the next, either today or Monday. I think the reaction to Lilly is from the RFK stuff and from the vaccine stuff and just him taking on kind of the pharma stuff. I don't think that it will take effect quickly. I think he's in against lobbying companies. I think Eli Lilly pays a shit ton of money to senators, and I think they will stop RFK from doing anything like crazy because there will be laws and things like there's a lot that goes on behind the scenes, and there is a lot of lobbying effort, and Eli Lilly is a big company with a lot of money. So I don't expect it. The other reason it's come down is because they expect RFK to hit the food channel, which is the salty and sugary drinks, which means that maybe Ozempic isn't as big or as needed. If he does, that food industry ain't going away overnight. So don't expect you to, show up at the Australia is a great example. They have a tax on sugary drinks. So a bottle of Coke will cost you or a can of Coke will cost you like $7 in Australia versus a bottle of water, which will cost you like 50 cents. And the reason is because that goes to support the healthcare of Australia. And there's a lot of politics around that, but that's the reason they have it. So it's just, maybe RFK does something like that where we put a national sales tax on anything with a certain amount of sugar. And then they go and do the natural, the fake sugar. So I don't think that this one's getting cut realistically. I do think that you cover this gap back to 903. So it will be up to you what you want. So Noah, would love to hear about Talon Energy tomorrow. TLN. This is the one that's in the peers with VST. So Talon Energy, we had a buy-in here at 197. You saw the earnings take off on VST. This is the one that got taken down because Amazon cut their deal. So the Nuclear Commission said, hey, you can't do a deal with Amazon because that's going to make consumer prices go up. I mean, again, somebody dinged me because I brought this one up on the Seeking Alpha podcast, and the dude in the comments said, it just went to a hold on the quant. You may not want to buy it. Douchebag, it went to a hold on the quant, and the price went up. So the quant is a guide, okay? It uses a guide. It went up down to a hold because of the valuation. Nothing more than that. And so you're paying up for a company that's not currently making money, but they may make money. And then you look at the quant, it says it's a hold. So it's just, Wall Street, there's 9 analysts that cover this. They say it's worth $220. That's a 4% upside. So I'd argue TLN probably has reached a little bit of a frantic pace, but it's new. And you're basically buying into something that's new. And you're buying into that nuclear theme. So that's my thoughts on it. I mean, there's nothing that I know that you don't know. It's just the nuclear theme with power is going to absolutely be a positive thing. So I think this one's a good one. But again, your money is your money. I don't currently own anything. And the reason is because it still doesn't have a 50 or a 200 day on the weekly chart. And for me, I'm going to invest in something else. But I do think that this one, if you're into the nuclear stuff, this one or NNE, which is also new, which has kind of gone as just as crazy. It's kind of settled down here. But again, they don't have it's kind of the same thing. They just don't have a chart for me to look at from long term. So from Spotify Trade, do you think it's a good time to buy? Last time Trump won, 2016, the S&P went up 30%. You think we will have a similar outcome? I wrote back, I'll talk about it tomorrow. It's not the same market and nothing is promised, but Trump comes into office with an economy that is absolutely on fire. It's at all-time highs, the market, very similar to when he came in when he beat Hillary. Okay? If they can manage to cut taxes, again, with a majority, let's hope we don't have another pandemic because that's the problem we had in the pandemic. Remember, Trump signed those stimulus checks while cutting taxes. So we had 1.5 trillion going out. You want to know what started the inflation thing? We didn't have inflation for a very long time. Jerome Powell, Janet Yellen in 2018 tried to actually raise rates, and it went horribly wrong. It wasn't inflation. It's just the bond market took it down. So you want to know what? If we cut taxes and we don't cut spending, that's a problem. And that's what happened in the first Trump experience. And then you had COVID. And yes, the market exploded because when you put $1.5 trillion of stimulus into a market that's already been on fire and everybody says, well, the pandemic's going to end at some point, then it lit it up. So do I think that we will see the same 30% as 2016? I think it's very likely. I think it's very, very likely. Again, pouring gasoline on an economy that's already hot. And think about it. Google. The Justice Department wants to break up Google. Trump may go ahead with that, but he's not bringing in Lena Khan. Lena Khan's out day one. Okay, Gary Gensler is out day one. Mergers and acquisitions will go on. There's a lot of money on the sidelines that will be put to work. So I don't think that even if you're a Trump hater, I was telling my girlfriend this morning. I'm not a Trump lover. I do hate Trump on a personal level. There's just issues there for me. But I don't think that I'm going to go against him in the market. I'm still betting on America. I mean, I don't know what else to tell you, but the anxiety about what will happen is anxiety about what hasn't happened. So I'm not too worried about it, to be honest with you. Fabiola from Spotify. Great show. Thanks for what you do. What do you think about Melly? It was on your scans list. They reported earnings 2 days ago and they beat revenue but missed earnings per share as they've spent more money than expectation. What do you think for the long term? I'm entered in at 1,800. So Melly is the Amazon of Latin America, and I don't know much about it. I know people love it. I think 1,800 is a great price. I think you can buy the dip. Look at that one. The algorithm got you out with a big loss. The algorithm makes you 46%. Buying and holding makes you 93%. So I would argue that the algorithm probably is a good way to enter this stock. But when you take a look at this one, it has broken down from that upward moving channel. Now we could just move this channel. We could say, we're going to anchor it here, and then we're going to anchor it here. And you're still within that channel, and you're at the bottom. Is it the bottom? Is it going to hang on to that 50-day? Well, look at how many times it's touched that 50-day and then popped up. So from a standpoint of money, I don't know the valuations of this thing. I don't know exactly where it's going to go. The analysts have it over 2,000. My buddy James Ford says why he's buying it aggressively yesterday. Over year to date, it's at 16%. If we go and look at that against the S&P, so far it's not beating the S&P. So over 1 year to date, it's lagging behind with yesterday. So I think buying the dip made sense because I think over time you'll probably beat the S&P like 5 years. So your time frame matters, but Fabiola, I don't think that buying the dip was a bad thing on that one. Now, the quant has it as a hold, and the quant has had it as a hold for a long time. So take that with a grain of salt. The valuation of it, a little bit expensive. You're paying 50 times earnings. So, the growth, fantastic. But again, I've got it on the daily stock pick watch list. It is over here. So when you sign up for Trendspider, you get this watch list, and it is on there. It is on there at 1,800. So we do scan against it on a daily basis. I actually use the 4-hour algorithm, and I say, okay, when has it gotten me in? So it was on there at 2,000. It made a mistake. Again, the algorithm loses 68% of the time. It wins 32% of the time. I tell everybody, make sure you're comfortable because it does make you 46%. So it still makes you 46%, even though it loses 68% of the time. But just make sure you're comfortable with, gaining 46% versus 93% buy and hold. For me, I'd massage the 4-hour algorithm and find another one. You can use the AI trading model for that. Now, scans, we got Microsoft, we got Meta, we got Apple. Apple has an entry. We can go in here and look at, I'm going to pull up the core investments, and we're going to go look at Apple. This is up 0.47%. We talked about how Apple got you out with a little bit of gain there, gets you right back in at about the same price, $227. It's just capitulating. There is nothing on Apple. I'm going to buy an Apple Mini. That new freaking Mini, it is awesome. $599. Are you kidding me? For the desktop and the software that you get, You buy a PC, you're paying $599 a year for the software license. So GCT, PSIX. GCT is one that was a former alpha pick that they got out of. With the short report, they got out at around 25. They bought in here at about 30. They got out with a loss. PSIX, this is the one that I think it was Brian brought it to us because it's on the top pick on Seeking Alpha. So if you go over here to Seeking Alpha and you go to top stocks and you look at the top quant stocks, PSIX is up there. And this one has a cross up, has an entry at 23. Hey, MACD is reset. 23. What's it up? It's up at 26 today. 26. So again, all of the scans are down there in the newsletter. You have the newsletter. Since I won't be doing a podcast tomorrow, I'm just going to let you know. Trendspider sale ends in 2 days. Buy it today or tomorrow. Spend the weekend. We got a bank holiday on Monday. The markets are still open, but spend the weekend setting it up. But I would urge you, if it's within your budget, get the advanced. The advanced just makes sense because of that unlimited one-on-one training. And I took it yesterday, and it taught me stuff that I didn't even know about. So if you have any questions, hit me up. The Black Friday sale, we went over everything. You can get, by the way, the premium and alpha picks. You saw me deal with Seeking Alpha with the 5 categories with the quant. This includes alpha picks. So it saves you $159. It's on the link tree up here bundle. Say you don't want alpha picks, but you want Seeking Alpha Premium, you can get that too. That's the next link. You save $30. And this gets you a free 7-day trial. You don't get a free 7-day trial of the bundle because you get access to the alpha picks portfolio. But if you just want Seeking Alpha Premium, you get a free 7 days. There's no reason not to sign up for it. And go and comment on the podcast. If you're a Seeking Alpha subscriber, just go over to Seeking Alpha and just type in Investing Experts up top. And you'll find Investing Experts podcast, and you'll see Stock Pickers Know Better. And it has my name up there. So if you have any questions, hit me up. Take care. Have a great weekend. I'll talk to you later.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.